Hi, I'm Will Benedicts, and welcome to another episode of Proctor Car Tips. In our last episode, we covered leasing versus purchasing a vehicle. Today, we'll be focusing on some of the major questions that consumers have about leasing. What happens if you drive more than the average miles? Leasing could still be a viable option for you. All leases can be tailored to the amount of miles that you drive per year, whether that be 10,000 miles or 20,000 miles. So what happens at the end of your lease? You have three options. The first option is to simply turn your vehicle back into the leasing company. The second one is to buy your lease, and the third one is to use it as a trade-in. To figure out which one of those is most advantageous for you, there's a couple of simple things to look at. Has the car been in an accident? Give it back to the lease company. Have you driven less miles than your lease allowed? If so, it may be advantageous for you to buy this vehicle because you can buy it for less than that residual amount, which you'll remember is the amount they said the vehicle would be worth in 3 years. Let's say that residual amount is $15,000, but the car's worth $16,000. Go ahead and buy it. You've got $1,000 worth of equity, or use it as a trade-in and use that equity as a down payment towards your next vehicle. Let's say that the car's only worth $13,000 and the residual value is $15,000. In this case, you're going to want to give the car back to the lease company and don't worry about taking the loss yourself. And the third option, if you do decide to release a vehicle, most of the times they will waive the disposition fee we talked about on the board, and the total amount you spent will have gone down a little bit. What happens at the end of your lease if you have a lot of wear and tear on your car? Keep in mind, the leasing company expects this car to be used over 3 years. They expect 3 years worth of wear and tear on your vehicle. They know it's going to have some scratches, some dings, and the interior is not going to look perfect. What happens if it goes over and above that? You need to talk to the leasing company and to your finance professional. Most leases will have an excess wear and tear waiver that allows for a certain amount of over average wear and tear to be just forgiven for you at the end of the lease. If you do use your vehicle for more than everyday purposes, including hauling, transporting, and things of that nature where you would put more than excess wear and tear on the vehicle, you may want to look at a purchase instead of a lease. Everybody knows when you purchase a vehicle, you can do a 2-year loan up through a 7-year loan. What about leasing? Your average lease term is going to be 3 years, although terms are available from 2 up until 5 years. You can also adjust your mileage. Anywhere between 10,000 miles per year up to 33,000 miles per year are acceptable for a lease. At the end of the lease, if you've enjoyed the vehicle and you're not ready to make another decision, call your leasing company. Most lease companies will let you extend your lease for up to another year at the same price and with the same amount of mileage allowed in that next year. Can I accessorize my leased vehicle? Certainly. Any factory available accessory you can put on your leased vehicle. One of the great parts is, because once again you're only paying for the usage of that accessory, you wind up paying less than full price. However, aftermarket accessories for the most part are not allowed on a leased vehicle. What happens if I get into an accident in my leased vehicle? It's a great question. Let's say the accident's bad enough to where your vehicle is totaled. It's very simple. You walk away from it. You don't have to worry about any negative equity. The lease simply ends and you can go lease or purchase another vehicle. Now, if the accident's not bad enough to total your vehicle, and it appears on the Carfax, at the end of the lease, your vehicle value is going to be a little bit less because of that accident. But remember, you already agreed on a residual value with the lease company. If it's worth any less, it's not your responsibility. The accident will not be held against you at the end of the lease. Now let's say the accident wasn't too severe. The mailbox just happened to jump out at you as you were backing out of your driveway. Just like with any purchased vehicle, you want to go ahead and have your insurance company repair any damage before you turn it in at the end of the lease. When is it not advantageous to lease a vehicle? Well, if you're looking for a used car, leasing's not for you. If you're going to be paying with cash, leasing probably isn't for you. If you like to customize your vehicles heavily, leasing probably isn't for you. If you're buying a car for a first-time car driver, you may want to look at something other than a lease. How much money down is required to lease a vehicle? We all know with a purchase, banks like to see 5 to 10% of the vehicle down. With a lease, money down's not recommended. The reason being is you're simply protected for the life of that lease from anything that happens to the car if it gets totaled. You're never in the upside down situation. Can I trade my lease before my lease term is up? It's a great question. Let's say you just leased a beautiful new coupe. But now things have changed. It's a year and a half down the road. You've got a family and you need a sedan. All you do is simply go to your lending institution or lease institution, ask them how much you owe on the car, have your car appraised, how much it's worth, and use it as a trade-in just as you would a normal financed vehicle. Thank you for watching our series on leasing. I'm Will Benedicts with the Proctor Dealerships. If you have a question, please comment or click subscribe for more Proctor Car tips.